Hello, and welcome to Speaking of Supply Chain, where we explore trends, current events, and innovations impacting the logistics and supply chain industries. I'm your host, Ellen Wood. Today, I am excited to be joined by Alan Vey from Aventus. And our conversation today is going to focus on blockchain technology and its application to multiple industries and areas of the supply chain. Welcome, Alan.
Hey, Ellen, thank you for having me. Excited to chat a little bit more on, all things blockchain.
Yeah, I think it's going to be a great conversation today. Before we get started, let's do something a little bit non supply chain, non industry, and do an icebreaker. So, what is your favorite way to get in some exercise?
Yeah, well, I live in Dubai, so it can be very hot in the summer, right? We're talking, I don't know
Mhm.
what it is, above 100 in Fahrenheit, like 45 degrees Celsius. So typically, all exercises indoor, whether it's a workout class like a Barry's or something, or a strength workout. Try and get a couple walks in, like some 10Ks in with my wife, so we have a good chat during the weeks. So, yeah, variety of different things inside and outside.
I live in Indiana and we have the opposite problem. It's frequently cold. It's either cold or it's so hot and humid that you don't want to be outside. So I belong to a gym. We have a fitness center here at the office, and I rarely use any of them. I have a home gym at home that I bought during COVID that I still have only used fewer times than I can count on one hand. I am terrible about exercising, but I love doing yard work. I love working in my garden, and I've been doing that. We've had a little bit of springtime weather come a little early this year, so I've been out in my garden and digging and raking and getting ready for planting vegetables. So I think that's as close to exercise as I get. Yard work is my go-to.
Nothing like some fresh air and getting the sun on you, right? Like that's what it's all about at the end of the day.
I know. After sitting in an office all day, I just need to get my hands in the dirt and do something that grounds me, and I feel like that does it. And then I get vegetables when I'm done.
Happy days. Tastiest snack as well.
Exactly. All right. So, on to our discussion today. We're talking about blockchain. And for our listeners who may not be as familiar with the concept or with the idea of blockchain, can you break it down into its simplest form?
Yeah, so this is something that we've had to do quite a lot, and hopefully my pitch has been refined over the years. Um, I think to understand blockchain, it's understanding the evolution of the internet, right? And where we're kind of seeing the latest innovations. So when the internet started, we had what was called Web 1, which was basically the ability to read documents that were hosted in servers, right? Plain and simple. Then we got Web 2, which led to kind of reading and writing, putting content back out there onto the internet very easily. This is sort of the user generated content era of Facebook and social media and all of that. We saw user interface innovations where the internet became more dynamic and colorful and the websites moved around and it felt a little bit nicer to interact with compared to the world of Web 1. And Web 3 is now the sort of next innovation, and that's where we are today. And it's not just read and write, but also the ability to own, to natively sort of own something in the digital context. So some people may have seen NFTs, where people were selling pictures of monkeys for a lot of money. All of these were just kind of initial fads, should we say, or applications of this technology, and that notion of digital ownership. Now, the term blockchain refers to the technology that enables us to create this digital ownership, digital scarcity, and therefore digital value. So we're no longer storing a digital representation of something physical. So if you think of your bank account, it says you've got $100, but really the bank's holding the money on your behalf, and that's just a digital representation. If you've got 100 Bitcoin, you actually own that 100 Bitcoin within your own wallet without any intermediaries. So hopefully that's helpful. This blockchain is the technology, and what it has done is it has new properties that previously didn't exist in technology. And these properties can be applied to different use cases. It doesn't apply everywhere, like people tried to sort of shoehorn it into in the early days, but it does give us different tools that we can now solve problems with that previously weren't solvable.
Okay, so talking about some of those problems, what industries have the most to gain from using blockchain technology in their supply chain? And is it as simple as you make it sound? Because you did simplify that very well, but I'm sure that it gets a lot more complicated when you're actually trying to do something with it. But what industries are utilizing this to their benefit?
Yeah, so it can get very complicated when you get into the weeds of any technology, right? But at the end of the day, the goal here is to see how some of these properties that we never before had can be utilized. And these properties are greater transparency, um, immutability, so the ability for various parties to agree on something and then not change that record afterwards, right? Sometimes people refer to it as an append only ledger, which means you can never kind of rub out a mistake you make, you just have to keep adding entries to that ledger.
Hmm.
Now, where does it apply best in supply chain? I guess that let's start with the definition of which supply chain we're talking to. So if we're looking at goods and services kind of moving around the world geographically, if that's kind of the notion of supply chain we're going for, then I would say this can be really valuable in any industry that is lacking in transparency or needs to give greater trust to the process. So one example could be carbon credits, people saying green fuels or whatnot. There have been many controversies we've seen over the years, obviously, within that space where people have claimed to be offsetting or using something that is certified as green, but you dig a bit deeper into that certification and some question marks may arise. A technology like blockchain would allow you to track from the source until the destination and kind of every step in the way what has happened and fully transparent in a fully transparent manner so that anybody could go and look and verify that that is the case. So it's typically very valuable in situations where there are multiple parties interacting in an ecosystem together who can't necessarily trust each other but need to find some kind of agreed interoperable backbone to communicate via.
Okay, so even if it's not, they don't trust each other, it's that it's such a complex relationship, multiple vendors, multiple steps throughout the process. It's, I don't think it's as much an issue of trust as that just reliable data that isn't going to have a change implemented from this language to that language as it goes through the process and through the supply chain.
Much more elegantly said. They don't have to trust each other. It's better if they do trust each other, but it still gives benefits to the entire ecosystem.
Of course, it just simplifies and ensures that the data is accurate from beginning to end without interruption.
It can't be, yeah, exactly. Can't be tampered with. Everybody can see it, and it's done without a trusted intermediary directly between the parties.
Okay. So it's not just supply chain that can benefit. I was looking at your website. There are a lot of industries that you work with. What are some of those other industries? We talked supply chain, we talked a little bit about green energy, and the one that comes to my mind that I know I've seen interest in is the fashion industry. Is that the only other industry? What other areas of business could benefit from this unbreakable chain of information?
Yeah, so there's an emerging term called sort of real world tokenization or real asset tokenization. And this spans, it's a $15 trillion opportunity as estimated by BCG and BlackRock and a bunch of different players. So immense. This kind of evolution of blockchain and the internet is arguably as impactful to how we're going to interact with each other as the original emergence of the internet. So industries that this does touch, and obviously banking, it has massive
Of
implications for
course.
the banking sector, how money's moved around, cross-border transactions, efficiency in dealing with kind of legacy banking infrastructure. And we've seen that the cryptocurrency is one use case of blockchain, which has obviously shown promise and some difficulties when
Mhm.
it comes to the sort of financial industries. Then we've got fashion is a great example, but I would wrap it into a wider sort of sector classification of loyalty, because that's really what most of the fashion use cases are.
True.
There is now this new ability to represent, if you're looking at more of a cashback type model, where if I purchase in a merchant, I get some kind of reward back from that. You can create these closed payment economies that can function much more efficiently. We've supported clients in reducing debt by 80%, increasing margins by 20% in that realm. But then there's also sort of new acquisition channels. I think users that are acquired via a Web3 or blockchain kind of strategy, whether it has to do with NFTs or tokens or any kind of digital gamified representation of loyalty, are 4 to 5 times stickier than traditional businesses,
Oh,
traditional customers, which is obviously massive. And I'd say, as one last point, so obviously that touches on many different industries.
right.
But I think one of the most fundamental pieces to the internet that is changing is in the world of advertising is cookies. So with global
Mm.
data laws, right, GDPR and the variety of different laws that exist within the states, it's getting harder and harder for companies to track users as they move between the different websites. And the mechanism to do that previously was called cookies. Apple, obviously, as they do not track nowadays, there are a variety of different people cracking down on this. Wallets give the ability to track, so wallets are a concept of ownership within blockchain. Wallets are the new cookie, essentially. They give businesses the ability to track customers again, but only on the terms that the customer is happy with. So it puts the power back with the individual. And I can share my data to get better product recommendations or whatever it is that I'm looking to leverage from it. But I'm much more in control of my data, sort of zero party data, people are calling it, where I can share data actively. So that infrastructure obviously touches advertising and therefore probably every industry. It's just marketing within any business, right?
Hmm. One other industry that you had mentioned when we talked previously was baggage handling. And I feel like this is something that every single person who travels has dealt with before, where it's my bag is lost. And maybe the airline can help. Maybe they can't. I've seen where people put air tags in their luggage just so they can have some visibility to it. And I imagine this is somewhat similar in use case to use blockchain for baggage handling.
Absolutely. So this is one of the great use cases we have live. This is at Heathrow Airport that we've done this with a variety of different airlines, and actually Vodafone is getting involved in that as well. And what we're looking at is combining a variety of technologies, so Internet of Things with blockchain and artificial intelligence. And what we're able to do, exactly to your point, at any point in time, it's actually staggering how many items get lost. So ULDs, unit load devices, are the kind of pods that go into aircraft and that carriage, the baggage or the mail or the whatever that goes in the aircraft, right? 5 to 10% of those are missing at any point in time. Now, mostly they find them eventually, but there are certain guarantees that have to be provided, especially for freight moving around the world, on how quickly something will move from A to B. Even a passenger moving from one aircraft to another, an airport has to guarantee that within 90 minutes you can get the baggage off the one aircraft to the other one to be able to sell a kind of connecting flight.
Hmm.
So what our system does here is it plugs onto these ULDs. You have a SIM-enabled Internet of Things device, so essentially like a little similar to an AirTag, just different technology where you're connecting to cell phone networks. It will be able to say the status of this item, and it can even be complex for things like medicines moving around the world that have to be kept at a certain temperature or not shaken. So it can give you a bunch of data around what's happened with this item as it's gone through its supply chain. The blockchain sits underneath this, kind of gathering this data record, but also acting as an authentication mechanism. You can see exactly who has scanned what at which airport, when it moved between the different parties. I mean, as you know, there's, depending on the airport, there can be anything from 5 to 20 different entities that touch a pod from one aircraft to another aircraft.
Hmm.
And so it really helps streamline that process and then generate the required documentation. Of course, the aviation industry is a highly regulated industry. It can help generate the documentation and save time in doing that. So we have proven a net cost reduction of 7% to the parties we have helped at Heathrow, which, if extrapolated across the industry, equates to about a $1.25 billion saving.
Wow, that's a lot. So one of the things that came to my mind while you were explaining that was, you know, how is this going to change the integrity of information and the um, I don't even know how to explain it. Like I'm thinking of when I order something online and I, get the shipping information and I'm watching, oh, it was checked in at this airport and now it's checked in at this airport and it's been shipped to this location and it's in transit. And, getting all of that information is handy as the consumer to understand what is happening with my package. But when it comes to whatever guarantee I was given at the time of purchase in terms of how long it would take, or um, the promises that were made by the shipping companies to be able to say, yes, this is out for delivery, but it's not actually on a truck yet. So how does that come into play when someone, an end user, is asking for verification of this data and wanting to understand? I mean, that's going to come back on a lot of these other companies to say, you know, maybe not fudging their details or over promising and under delivering. I mean, this is going to make some changes in the way that they have to honor the promises that they've given to their customers. Is that a good thing? Is that a scary thing? How does that work?
Absolutely. So, I mean, it's a great example, right? I think it's worth exploring one more blockchain concept to illustrate the power of this, which is smart contracts. So, a
Hmm.
smart contract is basically a blockchain-based contract that can automatically execute various contractual clauses based on the information contained within that blockchain system. So, for example, let's say there are certain promises made through the supply chain of when something will arrive. You have to prove that it has arrived at that time. Your payment is triggered, or delay deductions are triggered based on something not arriving in time. You can make a much more efficient supply chain that doesn't have all of the complexity of the financing and all of that associated with it, which allows, I would argue, the efficient and the better players would greatly benefit from something like this, because
Hmm.
they are going to be able to save, they're going to be able to grow much faster without increasing their cost, right? However, those who maybe indulge a little bit more in some of the obfuscation you were talking about would be quite resistant to that.
Hmm.
Now, of course, it's a question of cost and time to help evolve in creating the right steps along the way, and the security around the data as well, right? When you get a delivery from Deliveroo, or whatever the equivalent one is in America, it doesn't really matter if you know where your burger is live. When there's sensitive cargo traveling in an aircraft, it's slightly different. Maybe the end
Hmm.
user shouldn't be seeing that, but the smart contract should just be regulating that. So building the system slowly but surely to ensure the right privacy protections around that data, whilst being able to leverage concepts like smart contracts and blockchain to really create more efficiency. I think ultimately that the leading innovative players will adopt it, be able to grow their businesses faster without growing their cost base because of it. And ultimately, these things would become standards if widely adopted enough.
So the companies that have already a good process in place are going to benefit better and faster from the technology just because they've already laid the groundwork and they've already established an understanding, maybe not to that degree of transparency, but are able to, again, just reap the benefits of having this technology underneath it, behind it, wherever you want to put it in perspective, to say that this piece, this unit is going to be where I say it's going to be.
Absolutely. And when you look at a world that's moving to artificial intelligence becoming so central to business processes,
Oh yeah.
having such solid foundational data that you can trust and that is reliable to build these higher level kind of AI models on top of and optimize your business only helps you accelerate faster into kind of becoming that industry leader.
Now, that doesn't mean that businesses that are still struggling with some of those concepts shouldn't try to include blockchain, because it's still going to help, but it's going to have a little more lift on the beginning to make sure that everything is what they think it is, or that their data is accurate, that their information that they're already using as their baseline has enough truth to it. That could take a little bit longer in an implementation. Is that fair to say?
That is accurate. From what I've seen in the aviation industry, at least some of the partners we've worked with, we're still just talking about digitization to a degree, right? Some of it is
Yes.
plain and simple. Let's not write this down on a piece of paper and hand it around, but let's actually put it in a computer. So there are massive benefits. If somebody is following those kind of processes and is already competitive today, just imagine how much better they could be by streamlining some of them.
Significantly. Just from moving away from paper, and I am a paper person, so I understand. I write everything down. If I write it down, it'll happen. If I type it in my computer, it might, just because that's the way my brain works. So I am out there killing trees. I recycle, but I understand the hesitation of getting rid of something written down on a piece of paper, or keeping a piece of paper as a record. um, so I can relate a little bit. What advice would you give to other listeners out there who are intrigued but unsure if they're ready for implementing a blockchain technology into their supply chain specifically, but into their business in general, whether it's baggage handling or the fashion and royalties, as you mentioned, any of these other industries, energy, if they're not sure, what would help them understand it better, be more comfortable with the idea?
So there's been an important evolution in the blockchain market, right? Like we had the application cryptocurrencies, which were quite controversial. There were various cases of fraud and whatnot. But the world has kind of moved beyond that now to where BlackRock is the biggest holder of Bitcoin, right? So we're in a phase of the market evolution where the protections put in place by have the regulatory bodies have basically caught up, and it's a much safer playing field. So obviously, number one is always risk mitigation. Nobody can take a solution that is ultimately going to damage their business. And the market has matured, but it's still about selecting the right partner, right? Somebody who has done some work within the industry already, um, typically bigger players rather. Then it also comes to how do you start? Typically, what we see market participants doing is proof of concept, right? Proof of concept in the innovation department. Start small, do it with 10 baggage handlers, and have them put it on their apps, put it on their phones that they're given, and just have a little scan of the ULDs and see how it works. From there, like dipping your toe in slowly, building from that, you can start seeing, okay, where might the benefits here be? Where wouldn't they be? And then that sort of scales up, right? Once you build a relationship with a party, once you start seeing some early successes, then we roll into multi-year contracts with a small sliver of functionality. And you can kind of grow on that by pre-saying, okay, here is what we think we're going to be able to deliver in terms of value add, and then you prove it. And slowly but surely taking those steps in rather than just jumping in all the way and saying, okay, everything is going to be blockchain now. That is very rarely the correct solution.
Well, I love that. That's one of the things that I know we do very often when it comes to, whether it's a network design or a facility design or a master plan. One of the first thing we look at when proposing some of these very, very large transformation projects to MeBot clients is quick wins. Where can we find the quick wins? Where can we prove that we know what we're talking about? Where can we show that there is value to the advice that we're giving? And, give that really quick, maybe not easy, but at least smaller in scale option to adjust something, to change something, whether it's a process or a workflow, and involve some sort of efficiency into the process so that then we can show, okay, yes, we can deliver some value, we can deliver some savings, and then move on to the next step of getting bigger and better and a larger scale transformation. So I love that that's an option, because if you're looking at a big technology change, a lot of companies immediately their response is, that's too much. That's too much all at once. We can't possibly do that. A rollout like that would cripple our operations. It's just not possible. So the fact that this is implementable in smaller steps that show the value and that can bring some of those savings to the table at the beginning is a huge opportunity for these businesses to get in and start utilizing blockchain technology in their business. I love it.
Absolutely. Yeah, you can spend $20 million on a big digital transformation project with one of the major consultants, or by selecting the right partners, do the iterative approach. And if you can find that internal champion who benefits from the optimization and they're a little bit forward looking, ambitious in their career, that's just the beautiful combination.
Right. You need that key multiplier within the organization to get really excited to be your cheerleader and really promote that so that everyone wants to get a piece of that pie. Everyone wants to be in on the secret and whatever is going to help them, catapult their careers or their business unit or whatever it happens to be. Um, no, this is really fantastic. So thank you so much for sharing your insights and technology with us. Where can our listeners reach you?
Yeah, so the best channel, all of our channels are on the website, so aventus.io. I think our most active place where we give the most regular updates are on Twitter, or now X, so that's at Aventus Network. And I'm always in there as well. Then in the blockchain, for the real diehard blockchain people who know about it, we're also in Telegram. So again, that's at Aventus Network.
Okay, yeah, that's not going to be me. Sorry. I will I will reach out to you on Twitter or your website. Um, Thank you again so much for explaining some of this technology to us and giving us a little bit more of an idea of how accessible blockchain really is for supply chain and some of the benefits that it can reap. That brings us to the end of our episode. If any of our listeners out there have a suggestion for a topic or would like to be a guest on the show, we'd love to hear from you. You can contact me anytime at podcast@mebach.com. As always, thanks for listening to Speaking of Supply Chain. If you enjoyed the show, please rate and review us on whatever podcast app you prefer. We're on Apple Podcasts, Google, Spotify, and iHeartRadio. Be sure to tune in next time.